Hey everyone, welcome back to Corporate Decoder. Today we're diving into X Financial's latest 20F filing, and let me tell you, understanding their corporate structure is like trying to untangle a plate of spaghetti in the dark. It might just leave you with a bigger mess, but don't worry, we are about to decode this and see what we find. First things first, let's get an overview. X Financial, a Cayman Islands-based company, operates mainly in China's online finance sector. They connect borrowers with institutional funding partners offering loan products like Saoyang Credit Loan. But the structure they use to do business in China is a bit complex, involving something called VIEs, or variable interest entities. This VIE structure is how they navigate Chinese regulations that restrict foreign ownership. Basically, they control these Chinese companies through contracts rather than owning them directly. It's a common setup, but it comes with risks and a lot of uncertainty, especially now as Chinese regulators change laws related to data and foreign investments. To give you a clearer picture, their corporate structure involves various subsidiaries and those VIS, but the shareholders don't directly own any of the VIs. It's all based on contractual arrangements. Now, a big chunk of the filing outlines the risks of operating in China. They're subject to government influence, changes in laws, and new regulations, particularly around data security. If they don't comply, they could face fines, business shutdowns, or even criminal charges. There's also this thing called the Holding Foreign Companies Accountable Act, or HFCA Act, that could stop their stock from being traded in the US if the Public Company Accounting Oversight Board, or PCAOB, can't fully inspect their accounting firm. Let's look at the numbers. As of the end of 2024, they had about 984.6 million RMB in cash and cash equivalents, which equals around 134.9 million US dollars. This is up a little from last year, showing they have more liquid assets. Then we need to check their total liabilities of roughly 4.8 billion RMB. Seeing these numbers helps us understand how solid the company is despite all of the external factors. Digging into the income statement, you will find that their total net revenue was RMB 5.87 billion, up from RMB 4.81 billion the year before. This shows growth despite all the complexities. Most of their money comes from loan facilitation and financing income. Operating expenses also went up to nearly 4 billion RMB. This includes costs for getting new borrowers, managing loans, and general administration. Zooming back out as of December 31, 2024, there are investments in these consolidated VIEs of roughly 5.9 billion RMB in intercompany receivables. Their success relies heavily on how well these related entities perform. One thing I am paying attention to is how Chinese regulations impact their operations as a microcredit company, which include the interim measures for microcredit companies. These rules cover everything from cross-regional operations to the size of loans they can issue. If they can't keep up with all these changes, it could really hurt their business. The risk is very real since, as always, X Financial is in a very competitive industry, as several major players are competing with each other in the Chinese consumer finance industry. A major risk is the interest rates, because they need to keep their rates competitive, or borrowers will go elsewhere and that would hurt their bottom line. There are new risks all the time. Any failure to catch those new risks and adapt may result in adverse effects on their business. And of course you knew this was coming, they have to protect all that personal user data. New regulations are constantly popping up, and any failure to comply can trigger investigations, fines, and business shutdowns. Finally, the report states the importance of not missing fraud. This reminds me that if their system fails to detect those actions, the whole model could come crashing down, affecting investor trust and causing further legal troubles. Now let's consider who's steering the ship. The key folks are Justin Tang, the CEO, and Frank Frierjung, the CFO. The team has entered into employment agreements to be the top deciders for this whole financial journey. Finally, as usual, the auditor KPMG Huazhen L. charged them RMB 13.3 million for their audit work for the year compared to the RMB 12.5 million the previous year. As for companies' overall governance, one highlight I wanted to call out is the adoption of an updated insider trading policy to prevent illegal trading. Now, looking at these results more broadly, X Financial is indeed navigating a complex environment, and they are still improving as their net revenue increases every year. The biggest problem, as I see it, is the intense regulation in the Chinese financial sector that keeps getting heavier. They are generating decent return on equity, ROE, and return on assets, RO, which means they are doing a pretty good job using shareholders' money. For me to invest in this company, I'll need to have a very close eye to what new policy might affect them, because as we could see, a single new item could change the whole analysis. Thanks for watching. If you enjoyed, please subscribe, like, and comment.